But we begin with the markets, as we always do here on NYSE Live. Joining me now is Seana Smith. She's the SVP and Senior Investment Strategist at Global X ETFs. Seana, welcome.
Ashley, thanks so much for having me.
So we're about 30 minutes away from the start of today's session. What are you going to be following most closely, Seana?
I think it's all about earnings. You mentioned that this is such a key week for earnings here this week, and we think that that is really front and center. Taking a look at the results that we've gotten so far really show that earnings have been solid once again this quarter. We've got about a third of the S&P 500 companies that have reported. Taking a look at those beat rates, very impressive there. Taking a look at the magnitude of the earnings beats, we think that is very important to call out. Beating by an average of right around 9.1%. That's better than what we have seen historically, so we think that that will really add to some momentum. And it also just reaffirms the fact that the fundamental side of the story remains very strong here for the market.
All right, Apple and Amazon set to report later this week. We heard from 4 Mag 7 companies last week. What do you expect to hear?
So Amazon and Alphabet, it's going to be very key here. Once again, CapEx spending for AI has been front and center. We certainly saw that on display last week when we heard from Microsoft and Meta. And I call those two names out because they were both out after the bell on the same day. We saw a very different reaction in the markets. First, we saw a bit of pressure here when we looked at Microsoft. On Meta, we saw a lot of excitement. So what does that necessarily mean for Amazon and for Alphabet here this week? We think there's going to be a huge focus on CapEx. When you take a look at the outperformance of Alphabet relative to many of the other Mag 7 names recently, I mean, the bar is very high. That is not new. That has been the story now for quite some time. So they will need to prove that the CapEx spending is well worth it. We talk a lot about the fact that 2026 is going to be a prove-it moment for AI. We think that is very much going to be a focus here over the next several days as we do get these earnings results. And then taking a look at Amazon, Amazon has been the leader when it comes to spending. So exactly that pressure from the street is going to be on that big name just to prove that their AI efforts are paying off and they're able to show that within the productivity numbers.
What do you think that the earnings from the Mag 7 companies we've heard from so far tell us about AI spending?
So it tells us that there's still a heck of a lot being spent on AI. But I think one of the things that we took from the earnings calls last week and what we expect to hear this week from the leaders of the rest of the Mag 7 companies is that that isn't going to change anytime soon. There's been some ebbs and flows, just whether or not we're going to see a bit of a pullback, what exactly that message is sending here to Wall Street. But time and time again, we know that the commitment to AI spending has remained very thorough. We haven't really seen a pullback across the board. We think when it comes to the AI story that actually the winners, the leaders that we're going to see here evolve a little bit. It's not just going to be the Mag 7 names that we are continuing to talk about. It's going to be beyond that. It's going to be names within energy. It's going to be the chip sector. We talk a lot about data centers, obviously the key role and the importance there that it plays within the whole AI ecosystem. So that's really going to be a focus for us here at Global X over the next 12 months.
And speaking of Global X, how is Global X ETFs helping clients navigate the tech sector?
We have a number of funds that really give our investors and clients exposure here to the AI story. I mentioned the fact that it has to be the entire AI ecosystem, that we're seeing this movement into the second phase, the third phase here of the AI investment story. And that's very much on display with a number of funds. We have AIQ, which is very much a broader based exposure to the AI investment story. We have DTCR. I mentioned the importance of data centers there and the extreme build out that we are expected to see here in the U.S. over the next several months and several years. So we think that there is a huge growth opportunity there to capitalize on that momentum. And then chip makers, beyond some of the big names, when you talk about some of the names that have been the leaders within the category, Broadcom, AMD, beyond that, Intel, we're going to see a bigger role of those names here over the coming quarters. We mentioned the fact that supply constraints obviously have been a huge story here to AI development. So as more and more players get involved, as they're able to scale their chips, we are going to expect and do expect to see wider adoption across the curve.
Are there any other sectors that you're looking at outside of tech that you think are interesting right now?
There's a lot that is interesting. And I think just going back to your first question there and talking about earnings and what we see in this earnings season, tech obviously has been an outperformer, but also communication services and industrials is right there. Palantir, we got those results out. And yes, that is a bit of a tech story, but we're having that exposure in Shield, and that is our defense tech play. So I think there is a lot of opportunity outside of tech. We certainly have seen a bit of a rotation when you look back over the last couple of months into a rotation into some of those underperforming names within the market. We think that that is healthy. Of course, as we do see more and more names participate within that upside momentum, we do think in the long run that that is something that is encouraging here and really shows that we do have more room to run to the upside here over the next several months.
All right, and of course, it was a very busy week last week. We received that Fed decision, interest rates staying the same, and also President Trump nominated Kevin Warsh as Fed chair, and we understand you think it's a sigh of relief.
It is, it is a bit of a sigh of relief for the market. I think of everyone that President Trump had on his short list at the end was expected to be markets friendly. When you take a look at Warsh, there has been a lot of questions about his hawkish past and exactly what that means. Maybe that means that he isn't going to be as apt to cut rates. We don't necessarily think that that is the case. Of course, he's questioned a lot about the Fed's balance sheet. That doesn't necessarily rule out future rate cuts. So we think overall it's going to be very positive here for the markets and almost just reaffirms that investment story that we are seeing currently right now within the market.
All right. Any other storylines you're following? Anything under the radar you think might make a big splash in 2026?
The government shutdown. I mean, not necessarily having a huge impact on the market, but certainly something to watch. And I bring that up just in the context of the data, because we are getting a delay here for the jobs data. JOLTS was not released this morning. We're seeing a delay for the U.S. Labor market data that we were expected to get at the end of the week. And I think that that is key just in terms of as we try to figure out what exactly the state of the economy is right now. Obviously, there's a huge focus on inflation. We have seen significant improvement there. There has been some weakness or stalling, obviously, within the labor market. So any further material weakness there could be an issue and could be a concern here for the market. So the fact that that report is getting a bit delayed, obviously something to keep an eye on, not something to really get too upset about or too worried about at this point, but certainly something to keep an eye on as this does drag out or could drag out for a little bit longer.
All right, Seana Smith, SVP and Senior Investment Strategist at Global X ETFs. Thank you so much for joining us at the New York Stock Exchange and for your incredible insight.
Thanks so much for having me.